Hello, I'm Rachel Jones from the Finance News Network. Joining me today from Australian Unity Office Fund is Fund Manager Grant Nichols. Grant, welcome to FNN.
Thank you, Rachel.
First up, could you start with giving us an introduction to your company?
Sure, Rachel. The Australian Unity Office Fund is a listed real estate investment trust that owns a portfolio of 9 assets located across Australian CBD and metropolitan office markets. The fund was listed in June 2016 and has performed admirably since listing, with a total return of 29.5% in the 18 months to 31 December 2017. The objective of the fund is to provide unit holders with sustainable income returns with the opportunity for capital growth. Based on the current trading price, the fund is yielding approximately 7% at the moment.
So now to your first half 2018 results. What were the highlights, starting with the financials?
The strong financial performance that the fund has incurred since listing continued through the first half of FY18. The statutory net profit was approximately $16.5 million greater than the PDS forecast for the same period. This increase in net profit contributed to the NTA increasing to $2.31 per unit.
And to the fund operations?
The half year was also very busy operationally, most notably with the acquisition of 150 Charlotte Street in Brisbane. This property is a well-located Brisbane CBD office building that is predominantly leased to Boeing Defence Australia on a lease until 2024. The acquisition was underpinned by a $50 million equity raising, which is sought to diversify the unit holder base and increase the market cap of the fund. Beyond the acquisition, approximately 6% of the portfolio was either leased or renewed, and a new 5-year debt facility was put in place, increasing the debt term to maturity and the debt diversification.
Thanks, Grant. And now to the fund in more detail. Can you tell me about the portfolio composition?
So as mentioned, the fund has 9 assets, providing exposure to every major Australian capital city other than Perth. Over 40% of the portfolio is based in the Sydney metropolitan markets of North Ryde and Parramatta. This is important because at the moment, Sydney and its associated metropolitan markets are demonstrating very strong underlying fundamentals, with low vacancy rates and increasing rents.
And what about the tenant profile of the portfolio?
The portfolio has excellent tenant covenants, with over 60% of the portfolio leased to either Telstra, the state or federal government, Boeing or GE. The quality of these tenant covenants should give investors confidence in AOF's ability to continue providing sustainable income returns into the future.
And what are your key metrics?
The fund currently has a weighted average lease expiry profile of about 4.5 years and 94.4% occupancy. Importantly, the fund has no significant single lease expiry until 2022, which again should give investors confidence in AOF's ability to provide those ongoing sustainable income returns.
And Grant, to a more general question now, what is the outlook for office markets and what impact could higher interest rates have?
The outlook for office markets remains very good, with the majority of office markets demonstrating improving tenant demand. Sydney and its associated metropolitan markets, along with Melbourne and its associated metropolitan markets, have vacancy rates below the long-term average and are demonstrating pretty healthy rental growth coming through. In regards to higher interest rates, the fund would be fairly insulated from an increase in interest rates due to the relatively low gearing and that over 70% of the borrowings are hedged to a fixed interest rate. Further, an increase in interest rates would generally be indicative of improving economic conditions, which would generally translate into increased demand for office space.
And last question, Grant, why should investors consider adding Australian Unity Office Fund to their portfolio?
The Australian Unity Office Fund is a great option for investors seeking sustainable, reliable income returns. With a high quality portfolio underpinned by excellent tenant covenants and supported by a high quality management team, the fund is well placed to continue its strong performance given the improving nature of tenant demand across Australia's office markets, which should be great news for investors.
Grant Nichols, thanks for the update.
Thank you.